What's up YouTube? On this video we're going to be going over how I was able to take a $2,040 trade trading live here on YouTube yesterday, what my bias was, the risk model that I was utilizing, why I was using all these 13 handles in order to create those huge moves, how I was able to protect myself in those huge manipulations as well. So basically we're going to be going over everything. So hope this helps. Let's get this. So we're going to be starting from the weekly chart here. Getting into the weekly chart, our overall draw was this gap in here and this inversion. Those two were what we're looking for, because those gap, including this week and this inversion, are very high probability draw on liquidities. And we are in our overall bullish market. We don't want to be trying to catch a top. Getting the daily that high from the weekly chart gets a bit more obvious here. It's a bit much more obvious to be traded into. This is the day. This is today's candle. So here we were looking for that. That was not reached yet, and we reached into that and into this inversion on the daily chart. So those were our basic drawn liquidities. I'm going a bit too fast on the higher time frames because the drawn liquidity was not the hardest part to manage here on this day. It was being able to take those small stop losses and huge moves while we were still in consolidation. That was the hardest part. So I'm trying to rush into the lower time frames because that is where most of the things that we must learn are. So looking out for this high in here. That's the weekly buy side liquidity. That's a very significant part. Drop down to the hourly chart. This is yesterday. So this is the 9th hour and this is the AM session. So those candles are basically what we took our trades in. Getting in here, we had this NWOG and this another NWOG. So being able to manage ourselves in between these new week opening gaps was the trick to being protecting ourselves here in this session. I'm going to drop down to the 50-minute chart. We had this huge accumulation in here and this sharp manipulation to both sides of the accumulation. We were able to take a long right in here. So I'm going to be going over that. So taking these lows, while we were trying to take these lows, what I was looking at was, okay, if we are accumulating in here pre-market. Now this might not look like an accumulation, but I'll be going over how I identify what accumulations are and what accumulations are not. You are going to need to use some specific algorithmic signatures in order to identify accumulations that could send price into large expansions, which this could be one of them. So basically we cleaned up this high pre-session at 8 o'clock and we shifted. And I knew there was an accumulation here and we're in deep premium. So even though we were in deep premium, there's a new week opening gap down here. So unless we move below this and start expanding lower, I didn't want to be in any shorts. So that was the idea why I did not want to take any shorts. Unless we traded below this, I did not want to take any shorts. So on the 5-minute chart, things get a bit more obvious. We opened up right here at 9:30. The buy side was clean, but the sell side was not cleaned up. So that was the liquidity that we're looking for. And I asked myself, okay, if price reached down into this low, how far would you let it go before you want to shift your bias into a sell model, trying to catch a short, that is. So I saw this new week opening gap. So unless we moved below it, I didn't want to be in any shorts because I knew that's a very strong PD array and price could just do the same thing that it just did here to bounce off. I was expecting that, and that was explained in the live stream. So we opened up, we created this SMT, and we dropped down and took this low. So we actually took 3 trades. I'll be putting a screenshot right here of the trades we took. And the first 2 trades were basically losing trades, but I am very happy that I took those trades, even though they were losing trades, because I was following my model. So this was the first trade that we were trying to take. We we got in here right there. We're looking for that inversion. So after price took that low and shifted, I saw that as a market structure shift. And since we are above the first presentation, I was looking for longs. I was Now we made one mistake yesterday. I most likely would have not taken this trade if I knew the new week opening up was down here because we had not reached down into it yet. So what we were actually looking at for this new week opening gap, we thought this new week opening gap was something like this. So I thought we reached into the consequent encroachment and we traded above this and we closed above that. So I was inclined to take a long from here because I thought we reached into the consequent encroachment. Now price should move higher, but we didn't. We actually didn't reach down into that. That was a fault made by me. I should have looked into it a bit more. But because price didn't take this new week opening gap, price traded down and took me out. Price had not yet reached into this new week opening gap. So we lost that trade. And the second trade was taken right up here after this market structure shift, looking for this new week opening gap, something like that. And we're stopped out in this trade too. So I used this as a market structure shift, knew that, saw that there was a low being created here. So I wanted to use that as a low that would send price higher to this relative equal highs, to the previous cycle's high, to the weekly drawn liquidity that we're looking for. But because this is a huge candle, I wanted to wait, and price came back and manipulated us for a reach back into the new week opening gap, but we were okay with that. We knew we had an inherent risk getting into that trade. But because we closed above the first presentation, above this week, and had a market structure shift, I wanted to take that trade. But that trade was a losing trade as well. Now, the third trade. Getting into the third trade, I saw that we reached down into this once and again, and I was explaining everything, every single last detail of the process of me taking a trade here. I saw us, I saw how we reached down into this. I saw how we reached back into that again, and after we did that, here a new 15-minute candle opened up right at 10:15, and that closed above the first presentation. That told me that okay, getting in here, do I want price to reach back into the new week opening gap? What would reaching back into the new week opening gap would mean? That would mean we were in a condition that I want to absolutely be out of not trading. But if price closed above this, I wanted it to bounce just like that and keep going higher. But if stopped me out, I would have just stopped the station right there because that was a market condition that I didn't want to be in because that was a very high resistance. Reaching back into this new week opening gap was a telltale sign that I don't want to be in that session anymore because from experience I have seen price doing that. It wants to stay there waiting for a some type of news or some type of cycle that is very significant to take it out of that. And notice that tomorrow is NFP. This is the day before NFP, the AM session before an NFP day. So if price wanted to reach down into here, I knew we were most likely going to be in a consolidation until the next AM session. So I took that trade as we reached down into the first presentation right there. So there were many algorithmic signatures being shown to me right here when I took this trade. So the first being closing above this, not just closing above that, but closing above that at a very specific time, which is a 15-minute open right in here. So as we closed above that, okay, I knew that was very significant. I saw how we closed above this week as well. I was looking at that as well. We closed above that. That shows me that we have now entered a buy program, and that buy program should stay above the first presentation. Or if it does not want to stay above the first presentation, we are going to more likely going to be in an accumulation that is going to stay in there at least for 90 minutes or for this waiting for the New York session the next day, which is an NFP day. So I was able to take a stab long right there and looking for this rejection block right up here. And we basically managed our trade. Do you see how beautiful that was? We got in right there. And when I saw that we traded above this candle's high, I mean this candle's high, which I already said, okay, this is going to be a bullish order block. As soon as I saw that, I was confident that I was in the right trade. So those specific things, those very, very specific things that I was looking for in price action were the things that were protecting me from trading in here, taking like 6, 7, 8, 10 entries in here, and blowing up my account. That is what I used to do when I was a trader that was not profitable. That is exactly what traders that are unprofitable, that are losing day traders do. But being able to wait to for those specific arrays, those are time arrays and arrays that are placed both in time and price. You wait for those only and only for those specific things, and you take your trades in accordance to them. So how I was able to not get on tilt even after I had two losing trades on this day was because I knew those two trades were not losing trades because of a human error. I took those trades as I should. I saw them and I took them and I reviewed them as I was waiting for the next trade. And as I reviewed them, I knew I was taking those trades in accordance to the model. So I knew it's just part of the win rate of the model that I'm using to take those two losing trades. So I was very fine with them. But imagine if I was taking those trades and those losing trades were because of my human error, that would have had a toll in my psychology, and that would have affected. I might have not taken this trade, to be honest, if I had taken those trades out of my model, because those trades were taken and were losing trade not because of the hit rate of the model, but because of human error. So I would have not been able to manage that. So basically, we trade live on YouTube every single day. The AM session starting from 9:30 open. It's basically we're going to be live basically in 23 minutes now. So hope you learned something from this. Make sure to subscribe and like the video if you like it, if it was helpful. So until speak next time, be safe.